Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. On Friday, the Australian dollar finished lower. Having lost its grip on the 72-cent handle, the market has staged a very sharp decline from 72.14 high and posted a low of 71.61, with the fresh low now this morning being 59. Last week, reports that US and China are willing to offer concessions in order to bring an end to the trade conflict was the catalyst between the sides. President Trump did go on to say at the weekend that progress had been made with China, although he repeated that there are no plans on lifting the tariffs on imports from the Asian country. Later today at 1 p.m, China is to release its data on GDP, trade and direct foreign investment. It is assessed from the technical point that the rejection from 71.90 to 72.10 area and also slipping under the 60-day moving average around 71.82 has posed further threat to the downside, with the immediate support seen at 71.35 to 45. It is assessed further weakness should come into play, and I do expect to see eventually a target of 70 cents. The dollar index still at this stage showing a round of strength after the market again witnessed a high of now claiming 96 handle. This on the flip side saw the euro weaker and closes in now on the target or the objective of 113.0520. It is assessed that with the MACD breaking down and also the MACD also rising on the dollar index should give clear way to the challenge the level of 113.0520 and reassess from there. Resistance at this stage comes in at 114.35. The dollar yen, since the break of 108.20 resistance or downtrend, has made further progress to the upside and now tackles the resistance up around 109.85 to close to this objective of 110.2025, where it's possible we might see a small round of profit taking from that area. Support at this stage is seen at 108.95. Well, since the rejection from 130, the pound has broken down lower and now awaits Theresa May, who speaks later today in terms of Plan B. With the rejection of 130, I'm now looking for the support at 128.30 and beneath there 127.90. Now, break of 127.90 will give me the next move back, possibly to 124, 125. It would seem that after 9 attempts on the top side of 1,300, the fact is the market has broken down and now plummets for $12 on Friday and challenges the level of 80. It is assessed that we could see further weakness, and from the break of this channel, once resistance was support, is that we're looking back to 1,270.72, which in some ways I have been calling because I felt this market was showing potential weakness as the MACD breaks down in accordance now with the RSI. Reassess from 70 as it could be a rebound and see the market challenge back to the top side again. Rounding up with oil, well, the market, as you can see, breaks the level of 52.90, which was the neckline of this inverse head and shoulders, and now progresses further with the immediate target seen at $55 a barrel. I am holding this view as long as we don't go beneath 52.45.85. If it goes beneath there, then this might negate this pattern. So just be on your guard where you keep your stop loss. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoyed the rest of the day and a great start to the new week.